Good day. I hope everybody's having a fantastic day. The topic I wanted to talk about today is employed versus business income. There's even a difference when it comes to being employed versus self-employed, being a business owner. And I'm going to talk a little bit about that because I've had people over my career that are confused by the differences and why one pays more over the other. So my defined topic is, do you understand employed versus business income and why the latter pays less tax and has more options? Hey, Lisa. So I'll explain this. It's pretty much similar in the US as well as Canada. There's some slight differences, but not a lot when it comes to how you can earn income and how you pay taxes. So we're gonna use a fictitious person. We're gonna talk about Joe Blow. We're gonna say Joe Blow works for XYZ company and he gets paid an hourly salary and he's making 15 bucks an hour, making 30 grand a year, and he pays taxes. So every pay period, whether he's getting paid bi-weekly or monthly, he's paying taxes. And he's paid taxes. His taxes are based on a marginal rate. So he pays taxes from 0 to, let's say, 30,000. He pays a set rate. Then from 30,000 to 60,000, he pays an additional rate. And then from 60 on, he pays another rate. So what does that mean? Well, if he's making $30,000 and he's only under that certain rate, he might be paying 25% tax on that $30,000. If he makes $35,000, he pays the rate from 0 to 30, and then he pays a rate for that additional $5,000 from 30 to 35,000. That is called marginal tax rate. It exists in North America. It doesn't matter where you live. The rate's different, obvious. In Canada, it differs from province to province, and in the US, it can differ from state to state, where you pay federal tax, which is a specific rate table in Canada and in the US, and then each state has their own rates that they add on top of that, and in Canada, each province does. So I'll say that one more time. If you're making 30,000 and your rate cuts off at 30, you're paying that rate only. You make 35,000, you're going to pay the rate from 0 to 30, and from 30 to 35, that extra 5,000, you're going to pay a different rate on it. And then they call that a marginal tax rate because they average out the two and say this is what your tax rate was for the year. So as an employee, that kind of sucks. You get paid after tax dollars. So when your paycheck gets given to you, if you're still in an archaic company that still cuts you checks, or if you get direct deposited like most people, you're actually going to get the difference. So if you have a dollar, you're getting paid and there's 30 cents coming off, you're getting 70 cents on your check and you're left with 70 cents. That's called net. That's your net income. That's what you're getting paid. But whereas if you're a self-employed person, it's done the exact same way. But then you have levels of being a business owner, where you can be a limited or an incorporated company. Some people call it LLC. I know that's the terminology that's used quite a bit in the US, but it's basically you're a limited or incorporated company. What happens then is when your company gets paid, they pay all their expenses first, and then the difference that's left over at the end of the year when you submit your taxes is what you pay tax on as a company. And if you're a director, an owner, or however you're getting paid, if you're paying yourself bonuses, you're paying yourself dividends, you're at a different tax structure, you pay less taxes because the company itself, again, only pays taxes after all of its expenses are paid, not before they pay taxes. So if they're getting paid $1 and their expenses are 70 cents, they're getting taxed on 30 cents. That's all they're getting taxed on, is they're getting taxed on 30 cents of company income. And that company income can now be paid out and being reduced more because of bonuses, dividends, etc., to the directors or owners or whoever they decide they want to pay themselves. So I know it can be a little bit confusing, but just understand that if you're an employee, you're getting net income, and then you're expected to survive off of it and pay your expenses out of that net income. Whereas a company pays all its expenses first, and then it actually only pays taxes on what's left over after it's paid for all its overhead costs, its staffing costs, everything. All expenses incurred by the company get paid first and taxable only on what's left after the fact. So that is why it is powerful to go from being an employee to being a business owner. Because again, as a business owner, you pay less taxes. Employee, you pay way more taxes. So again, just to reiterate and explain it again, if you're making $1 as an employee, you're taxed and you're paid the difference. It's called net income. As a business, if you're paid $1, you pay all your expenses, all your overhead from that dollar, and if there's 30 cents or a quarter left over, that's all you're going to get taxed on at the end of your corporate tax year. When you submit your taxes, that's what you get taxed on. So talk about efficiencies, talk about the fact of living at a higher level. An employee is always going to be at a higher tax bracket than somebody that's an actual business owner. So we have Lisa watching, we have Raphael watching. How are you guys doing? I hope you're having a fantastic evening. But the only way you truly live and succeed in life is to be a business owner, right? Not self-employed, because just self-employed doesn't make you a business owner. It makes you what's called a proprietorship. And that proprietorship gets taxed at the same income level as an employee. The only difference is you think you're a business owner. If you really want to be a business owner and you want to understand the ideals behind being a business owner, read a book called Cash Flow Quadrant by Robert Kiyosaki. Again, I'll say that again. Read a book called Cash Flow Quadrant by Robert Kiyosaki. Robert talks about in that book how 91% of people live on the left side of the quadrant, which is employee, self-employed, working for other people, trying to get ahead. And I won't explain the differences between them. I can do that in another video. But the true entrepreneur, the true person that's successful, is the person that makes it to the right side of the quadrant, which is a person that's a business owner or an investor, somebody that's able to invest in things, take income off of it, run a business, pay their expenses, have less tax, right? And they just keep on keeping on. So a true business owner is on one side of a quadrant. So just think about the quadrant like this, right? The left side of the quadrant, you're an employee, self-employed. On the right side, you're a business owner or an investor or both. Those that are truly successful are what they call the 9% of the successful people in North America. Less than 1% of people of the North American population are actually extremely wealthy. Doesn't mean that there isn't successful people that have money though. In that other 8% that I talked about, or the 9%, it just means that the truly uber wealthy are in the 1%. So I hope this helps. I hope you understand a little bit more about the differences between employed and business owner. An employee gets taxed, gets given income after the fact called net income. They pay their bills. And a person that's a business owner pays all their expenses first, then pays taxes. So they get taxed after the fact, whereas you as an employee are taxed first and then are expected to live on what's left after the government takes their share, their piece of the pie. So my advice to you is always strive, look for a side hustle, read a great book called Side Hustle Millionaire by my mentor and friend, Tony Watley. That'll help you out a ton to understand whether or not you want to be in business or not. Again, that's called Side Hustle Millionaire. You can find it on Amazon. You can find it on Audible. It'll explain even more so the differences between employee, employer, and being a business owner. So strive to, if you want to, again, it's not for everybody. If you want to be an employee the rest of your life, that's okay too. I'm not here to judge you, but for those of you that have it in your heart and yearn to be your own boss and actually eventually escape the rat race of going to work, go home, get paid, and stuck in just making some income and getting taxed to death, you need to go out and learn how to be a business owner. And you can do that as a side hustle. And there's great information out there on how to do that. So 2 books, again, I'll reference them. How to Learn About Differences Between Employee and Being a Business Owner, Cash Flow Quadrant by Robert Kiyosaki. How to Create Your Own Side Hustle. Get the book Side Hustle Millionaire by my friend Tony Watley. You can get it on Amazon. You can get it on Audible and listen to it. But you know what? If you've got that yearning, do something now. When you get off this video, go log on, order those books, go download the audios from Audible, start listening to them, change your life. If you have any questions, DM me, get a hold of me, and I look forward to talking to you guys tomorrow. And why do I talk about all this stuff? I want to teach you some things because I give a heck. God bless. Peace out.